Hey everyone, welcome. This is Ryan B with Practical Forex Trading. This is your gold price analysis. So gold versus the US dollar. The date is February 2nd, 2020. Gold. I'm very bullish on gold, right? So means more gains ahead. So after fighting some resistance at this 1600 mark, we see price rapidly approaching with the bullish weekly candles. Let me go ahead and zoom in. Reset this. There we go. This is our weekly price action, and we can see, so we had that previous high in the past. A couple weeks ago, we saw price spike up to 1600 and then quickly retract. Now, at that point, you're not quite sure, right? This is where we left it last week. That's where price was. Prices popped above that 1565 level up to 1600, then below. Now we see rapidly bullish progressive action up towards new highs. So we should see a revisit 1611, this previous peak soon. And it appears that we will see more bullish action ahead. So let's go ahead and draw a parallel trend channel. It's going to match the angle of our earlier trends. Okay, see these parallels below it? I should clarify, that don't mean earlier trends, but our other parallel channels. Okay, and so here we can see price, right? See, this is just like support and resistance in a horizontal fashion, but it's in an angle because it's over time. Looks like my angles are almost right. There we go. Okay, so if we use these trend lines, we can see that price has some good support. So if I'm thinking about buying gold, right, I'm going to put my stop loss below, at this point, below the 1450 mark. There's actually some decent support after 1526. So we think about more minor support, and I'm going to go ahead and change my colors in those. Think about this blue as major support and resistance. We'll think about this gold as minor. See all these places where price previously was a ceiling, came back below, popped through on top, came back down and rested, and then was quickly more buying action. So it looks like we could see price now making another go for the 1790 range. Let's call that our next target. We did have this extreme high at 1900, which we could see again, but we see this 1780, 1790, 1800 line has acted as resistance way back in 2012. We saw gold really, look at this kind of in the channel, right? So this is a great example of a range trade right here. Gold was kind of the prices bouncing around in this range for a couple of years, and now we see price entering that range again. So what we'll probably see, typically you'll see the price go all the way to the top of the channel, then it'll come back down to our support and then gain strength, retouch the trend line, and then continue on. Now this is weekly, right? This is a weekly chart, so this could take a good or better part of 2020 to reach this, but sometimes when these bulls are moving, they move fast. The initial uptick is really quick, so we could see this in a couple of months reach the 1790 mark. Let's go ahead and apply our moving averages. If you've watched my videos before, you know I like to use 3, 20, and 15, and 200, and those moving averages give us a good idea of how far price is going to go, and it'll reaffirm, by the numbers, how long we think our trends are going to last. There's a saying in trading where you want to cut your losses short unless your profits run. So as soon as you see your trade going the wrong way, you want to think about exiting it. You want to cut those losses short. But as soon as you see your trade going the right way, You don't want to just cash out for a little bit. You really want to hold it for as long as it'll take you. Because otherwise, you're just going to be stressing out, looking for more opportunities to enter at a price that was actually worse than the first price he had. So here we go. We see the 20 on top of the 50 on top of the 200, which is a very bullish signal with moving averages. Price is moving well ahead and on top of the 20-week moving average. We see that previously happened when before, when price gets on top of the 20. We see some nice gains. The fact that all three, back here we had some confusion. These moving averages really not crossing over because price was going sideways, right? Up, down, up, down, up, down. Not really making, hard to make money when price is going sideways. Looks like we have a trend resumption, trends breaking back into this range. So there we go. To reverse my sentiment, like I said, first we'd have to see price go below 1530. Then I would be thinking maybe I'm bearish. You know, if price were to get rejected and sold off back under 1530, then next I'd be looking for 1440. But still, even if price at this point were to retract all the way to 1380, it would still be a great place to buy, possibly, and to push it back above this trend line towards the $1,800 mark. Let's go ahead and get a little bit more granular in the daily. There's our daily chart. We see daily moving well on top of the 20-day moving average. And this is good. Just look at this last run. If you want to know how to use moving averages, look at this last run when price was moving on top of this moving average. It moved from the end of May. Even here, it came down and touched it in August and went all the way up till September before it crossed below it. So it went to show there was 6 good months of solid buying as long as price stayed above that 20 fast moving average. So we could see more here. And now this is your trend line you want. If price were to dip back down to the 1540, 1530, hey, no problems. I wouldn't be too worried about it because it looks like we have a nice solid uptrend. And let's go back to the weekly and let's just look at this support. I mean, you know, you think about all the things that have happened in world markets, all the data releases, all the Trump tweets, and that hasn't changed anything about the course that this is going, right? So this is a trend line that goes all the way back to 2006, and we see lots of good foundational support being built. Price was really never dipped below 1,200. And now appears to be shooting back for the $1,800 mark. So I hope you all have a great week of trading. If you want to make sure to stay updated with all of our gold dollar price analysis, make sure you click subscribe in the bottom right-hand corner of the screen. All right, everyone. Happy trading.